Welcome everybody to the Festival of Learning, a realvision ledger free event. Thank you all for joining us. Today we're talking about the crypto cycles, past, present, and future. My name's Austin, host of one of the largest crypto YouTube channels in existence, AltCoinDaily, joined by two juggernauts today, David Duong, head of research at Coinbase, and Kevin Kelly, co-founder of Delphi Digital. Thank you guys for joining me.
Thanks for having us.
Happy to be here.
Yes. David, how you doing today, man?
Doing pretty well. All things considered, yeah.
Awesome. Kevin?
Same. I mean, all things considered, it's a good week to be recording this, I think.
Absolutely. And with that, let's jump right in. I want to start off with maybe a more broader question in that any markets are cyclical, but like what determines the cyclicality of a Bitcoin market cycle specifically? Is it just the halving or what do you guys look at?
Yeah, I'm happy to jump in, and then Dave would obviously love to hear your thoughts. I think from an outsider's perspective, it's very easy to see how people can assume that Bitcoin and the rest of the crypto market kind of operates, on its own time frame, right? Or there's no real rhyme or reason to its fluctuations or its cyclicality. And when you actually look back at prior Bitcoin cycles, right? And we'll use Bitcoin as the crypto market benchmark, given it's has the longest price history. What you wind up finding is that it's actually not only very cyclical, but also very correlated to a small handful of bigger kind of macro cycles that really drive asset prices, not just within crypto, but across traditional assets, equities, fixed income, commodities, even the dollar. And so one of the biggest kind of kickers of that is when you overlay Bitcoin's prior cycles over things like global liquidity cycles and the US business cycle, they line up incredibly well, right? Almost to a T in terms of Bitcoin's tops, then Bitcoin's bottoms. And so it's really interesting when you look at and do cycle analysis, the consistency of what a Bitcoin cycle looks like, all the way from the timing between its peak to trough drawdowns, the recovery time to prior cycle highs, and then how long and how kind of the extent to which Bitcoin continues to rally after it breaks to a new all-time high, really down to almost the week for the last three cycles has been remarkably consistent. And that's because it's very tethered to these kind of broader, bigger, exogenous macro cycles that I'm sure we'll get into, during this discussion.
So what Kevin's saying has a lot of appeal to me. And I think intuitively it kind of makes sense, right? Like I think Bitcoin's kind of movement or co-movement with the broader business cycle kind of works in part because Bitcoin started in 2009. And that was the bottom of that cycle marked by the global financial crisis. That's where Bitcoin kind of emerged from and crypto more broadly. But even though that's coincident, I don't necessarily think that it provides a causal relationship. And that's fine. You don't necessarily need it to be. I think that still it works. But I also think that intuitively, it makes sense that some of these, let's say we take sentiment indicators in the business cycle. I think some people use ISM, for example, some people use other things, but it tends to overlap with Bitcoin performance because, if people feel wealthier, for example, they're probably going to be more inclined to use any of the excess capital they have to invest in longer duration assets. But then those indicators tend to be a lot more coincident rather than leading for crypto. And that's, again, probably fine, not altogether helpful for us, because if we're trying to find information that gets us to a place where we can invest reliably on this kind of stuff, the timing of that information, you're already seeing that happen by the time it has an effect on crypto prices.
Yeah, I think if I could just jump in, because I very much hear David's points and the really good ones. The point of the predictability of this and having them be more kind of coincidental indicators, I think the next step of that is if you can, again, no one's got a crystal ball here, right? None of us knows exactly what's going to happen next. But if you can come up with a methodology for increasing the probability that you're able to predict where that business cycle is going to go, right? And really importantly, the kind of key inflection or turning points in the business cycle, then you can kind of overlay and think through, okay, what does that mean for future asset prices, right? And again, I emphasize that while we're talking about crypto here, this does apply to, traditional markets as well. I think that's the part of that can become predictive, because these business cycles, especially over the last decade, given a lot of changes, both on the regulatory side, but even within global liquidity cycles becoming more consistent, they do have they don't repeat exactly, but they rhyme with each other in terms of their timing as well. And so that cyclicality, if you can start to identify those inflection points, gives you more of that predictive power, I think.
I agree with so much of what Austin says, but there are just a few points that I would love to kind of get, your view on, Kevin, and you too, Austin. I mean, for me, I agree with you that, it would be nice to pinpoint the cyclicality of these things. And if they were to out of sample, that'd be great. Except that what we've been seeing, especially on the macro side, and, I just have looked at the macro side, I know, Kevin, you have too, for a very long time. So many of the traditional relationships that we are used to don't work anymore. And that is what kind of concerns me when we use some of these indicators to then kind of inform our decision-making with regard to what's happening with Bitcoin. It goes from like the very big things to like tax and spend isn't how we run fiscal policy anymore. Like a lot of it is printing, which is why, in fact, many of us like Bitcoin, right? Like because of that expansionary fiscal policy, like the risk of running into catastrophic events. We're seeing it right now with the move in, global sovereign bond yields, for example. I wonder if because these relationships are breaking down, whether we can still rely on a lot of these factors that we're trying to look at the moment.
Yeah. Austin, if you want to jump in, Dave and we'll just continue to go back and forth. But one thing that definitely comes to mind at that point is if we take a step back and think about Bitcoin, at least in my opinion, Bitcoin's kind of biggest value proposition, right? Or the most tangible one. It's not so much a hedge on inflation in the sense of consumer inflation, right? Which we've seen over the last 18, 24 months. It's really a hedge on currency debasement, right? And which makes it a very, very leveraged bet on liquidity expansions, right? When you typically tend to see liquidity expand, that is a more risk-on environment, but it's also an environment which you tend to see more currency depreciation and debasement, and therefore you have scarce hard assets like a Bitcoin, like a gold, tend to appreciate, right? So it's the relationship between both the business cycle, but also what that really does to inform what will happen with the liquidity cycles that gets, I think, to the heart of what Bitcoin's long-term value proposition is. Because to your point, David, I came across Bitcoin, initially back in 2013, totally dismissed it, didn't really start doing my own due diligence on it and like digging into understanding it until later 2016, really into early 2017. And what attracted me to it, because I come from a more macro background, was it was the most unique macro asset I had ever seen. And so I came at it, I'm sure you approached it in a similar way. Like that's what attracted me to Bitcoin initially, was more from the macro sense of what this thing could be. And the more you kind of looked at this and dug into it and look at these different cycles, that liquidity aspect is so crucial. And so if we get, expansionary liquidity environment, that's when you need to expect something like Bitcoin to outperform. And we've seen the reverse side of that coin, but pun intended, over the last 18 months, right? Because there is, two sides and there is a double-edged sword to that.
Kevin, I feel you kind of just mentioned some of this, but a question for both of you. Where are we right now in the business cycle? Is it a clear contraction? Is it a clear expansion? And then are we in the same place with the Bitcoin cycle?
Yeah, so far we're pretty on track, actually. And if you overlay Bitcoin versus its most recent cycle, for example, it's still following it almost to a T. Where we are in the business cycle, and this is where I know it's a longer term conversation, right, or a longer term time horizon, where I think we could see some more short to medium term volatility is I think there's a risk of, we've seen the ISM bottom. The last couple of months we've seen an improvement in the ISM, a recovery. It's still technically below 50, which means that it's in contractionary territory, but it's starting to recover. If that continues to expand, okay, then great, we're right on track. But I do think, similar to like we've seen times past with prior business cycles, we could get this kind of false breakout in the short term, right? Where things start to maybe look like they're improving. Then you have something that really hits the fan and it causes economic activity and sentiment to take another leg lower, right? And that's what I think my base case is heading into the first quarter of next year is I think we are at a much higher risk of that event happening. But the worst, for the most part, is behind us, at least in our view.
David, what do you think? Because you put out great research with Coinbase. Where are we in the Bitcoin cycle?
So I think the economic cycle and the Bitcoin cycle are, I take them slightly differently. I think for the economic cycle at the moment, my impression is we would already be in a slowdown in the US at least, had it not been for all the fiscal stimulus we've received. And a lot of that's come in the form of the Inflation Reduction Act, the CHIPS Act, the Infrastructure Act. I mean, like all these things, we're spending around $2.1 trillion over the next few years. And this is in part causing a lot of the supply distortions, which is contributing to the higher yields that we're getting. And the problem that we're reckoning with at the moment is, does higher yield necessarily translate into a problem for long duration assets for things like equities, for crypto? I don't think that historical records actually prove that that is necessarily a problem. It's the way we've gotten to higher yields that's really been a problem. It's, you can see that in the MOVE index, for example, which tracks the volatility of bonds. You see that it's been highly volatile. This thing has just been really unhealthy in the way it's moved. So that for me has been the problem. But when we're thinking about real yields, for example, and that would take the headline inflation minus, the yields minus the headline inflation, for example. I mean, things are actually somewhat stable on an ex post basis. So the reality, I think, for something like crypto is we could actually still do fairly well. And I kind of get to the same conclusions that Kevin does, but I get to it in a slightly different way, because my take on this is we will probably run out of room for stimulus by the time we get into the first quarter of 2024. I think that at that point, we probably will still get a recession. A lot of people have been asking this question of like, are we in a recession? Have we seen it? Have we priced it in? I don't think we fully priced it in, to be quite honest with you. And I think that we won't fully price it in until we get into the first quarter of 2024. But then that's going to open us up to a much better environment by the time we get into the second quarter of 2024.
Now, I hear all the time, markets are forward looking. But like for me as an average retail investor, I don't quite know what that means, because I would think, I'm so bullish on Bitcoin for so many fundamental metrics. That would be forward-looking to me. Or a recession is sort of so obvious. That would be the other side, forward-looking to me. How do you guys think about that?
I think it's a good point. I think that the timing of when markets start to price things in is an important point here, because, for example, what you saw late last year, right? 2022, we know, was absolutely abysmal for assets in general, right? 60-40 portfolios got blown out. Bonds had one of their worst, years on record. Stocks obviously got crushed. Crypto got crushed. And as you got to the beginning of Q4 last year, really into October, what we saw was early signs, indications that the drawdown was really driven by a substantial contraction in global liquidity. Then you started to see signs that liquidity cycle was bottoming and starting to reverse, and risk assets started to initially kind of sniff that out late last year, but really getting into the beginning of this year, right? And that was, in our view, driven largely by those kind of bigger macro factors, right? Specifically liquidity. And as liquidity started to expand, you started to get more of a rally in risk. You started to see bears kind of capitulate to a certain degree, right? And kind of throw in a towel, because this was probably one of the most hated, has been so far one of the most hated bear market rallies in history, right? It confuses and frustrates a lot of people out there, especially investors. And so in that regard, if you were coming into, a lot of people came into this year thinking that we were going to see a continuation of what we saw in 2022, and they were a bit befuddled by this, surprising reversal, right, in risk assets. But markets, again, started to more forward-looking, started to price in that future, let's call it 3 to 6 months expansion of liquidity conditions that help to drive asset prices higher, risk asset prices higher, at least in the first half of this year. So to your point about long-term, right, I think the three of us on this call were all, extremely bullish on Bitcoin and crypto longer term. Doesn't necessarily mean that end state, right, is going to get priced in immediately today. And it's also important to understand supply and demand dynamics, right? Who's buying this? Who's selling this? Where is that federal dry powder that comes into increased demand? One question I would have for David, and this is, again, just a thought experiment, because I've gone through this too, of if we don't have, I think a continued recovery in global liquidity is probably one of the most important factors for us to get a new, call it, crypto bull market cycle. Because if we don't get that, what I struggle to find is, where does that new demand and new kind of capital flow come from, right? And there are arguments to be made that maybe it comes from traditional assets, right? As you reallocation or repositioning into something like Bitcoin, maybe we get a drop in real yields. And so, you start to see assets like gold and Bitcoin appreciate, at least relative to other asset classes. But to get that true kind of, bull cycle that a lot of people are hoping for, I think without that recovery in global liquidity, I struggle to see where that demand would come from.
Yeah, that's a really good question, and I think as far as liquidity is concerned, I mean, this is something that's not just impacting crypto. I mean, it's affecting traditional assets as well. So it's not as if we're unique, but perhaps some of the reasons that have depressed liquidity levels, that is, are somewhat more particular with respect to what's going on with the regulatory situation, and in some respects, what's going to happen with anticipation for, say, a Bitcoin spot ETF. I think that there's kind of a chicken and egg situation where, I think a lot of people anticipate that there's going to be some kind of increase in liquidity following the approval of those spot ETFs, and the probabilities that are being assigned here are super high at this point, particularly with respect to everything that's gone on with the court cases very recently. But the capital required to kind of reprice crypto, I think that it doesn't come until you get that ETF. It's very hard to price this in beforehand, because you really do need participants to kind of say, I previously didn't have access to Bitcoin, and now I do. And, many of us in this space kind of argue, oh, but, you can go to Coinbase, you can go to other exchanges. There are ways you can get access to it. But I think sometimes we speak from a place of well, we've already done it, so we think it's easy. But for the average person, it still isn't. And the themes that resonate with us in the crypto community are so different from the ones that resonate with your average person who's not initiated into the space. I would say, you and I probably go to a lot of conferences, Kevin, and the conversations are had around hey, what's an account abstraction going to do to this space in terms of changing the user experience? Or does cross-chain interoperability, once it gets introduced, will we not have to worry about fragmented liquidity anymore? And those things are important from the long term. But what people care about in this space is, hey, is the US going to keep us from trying to invest in this stuff? And it's a big question. It's an important question. But I think those things remain an overhang on trying to actually get liquidity into the space.
Yeah, I think it's a really good point, and specifically the one you made around, we saw, again, when we had the BlackRock filing, there was obviously a bit of a pop in the market, right, in Bitcoin. But to say that the approval of a spot Bitcoin ETF is entirely priced in, by definition, is very, you essentially can't say that, because the people who are pricing that in are trying to front run, right, what those flows would look like. But it's the actual, I think what you're getting at is the actual act of people investing in, right, and putting capital into that ETF. The flows that come in are really what are going to drive price, right? Because that's typically what you tend to see, right? So it's almost this kind of bifurcation between, you've got some front running, which starts to price something in, but you can't fully price in the impact of a Bitcoin ETF because you don't have those flows yet.
Exactly.
Now, the one thing that Bitcoin has that no other traditional asset has, as we know, is the halving. Coming up next year, obviously we understand what that means on the supply faucet side, but in a way, does this sort of set up maybe a perfect storm for Bitcoin at the end of 2024 into 2025? Because typically in these crypto Bitcoin cycles, we see Bitcoin top off maybe 12 months after the halving occurs. Also next year, we have the Bitcoin ETFs, potentially sometime in that next year, obviously bullish from the demand side. And if a recession happens, or if the market tanks, I think both of you have said, man, we better watch out for that in Q1 or Q2 of next year. So is that not lead to a perfect cycle, maybe for Bitcoin entering 2025?
I think the Bitcoin halving for me is, there's two questions there. One, the impact of the Bitcoin halving, and two, what does it look like relative to this confluence of other factors that are taking place at the same time? And I would say for the first one, the challenge I have with the idea of the Bitcoin halving being a bullish event, and so let me establish, I do think that it's going to be meaningful, and I think it will be meaningfully positive for this space. But if you look at the evidence, and typically what people do, and this frustrates me, they basically just say look at the Bitcoin price, look at the Bitcoin halving, it went up when that happened. And I'm like, well, you can't do that because so many things were happening at that time. You look at 2012, for example, and it didn't really move. But then once it got into 2 months afterwards, it started moving because the U.S. was also in a debt ceiling crisis. But a lot of people said, oh, that was just, a lagged kind of factor of the Bitcoin halving. when you defactor it, and you just do that really simply with taking a regression analysis of this kind of stuff, like it really doesn't prove anything. Neither did it prove anything in 2016 either. And that was coincident with what was going on with Brexit and other things. The only time it really showed a effect was in 2020, because we had all this liquidity influx due to the pandemic of basically all these governments saying like, wait, we need to spend our way out of this. This is a huge worldwide health crisis. And you saw that when you take the liquidity out of the equation, actually what you're left with is still a positive move in Bitcoin prices. And probably that had a lot to do with the halving. So we have one real instance, where it proved anything, which is fine. It's one more than zero, but it's not like a history of events that really kind of shows this stuff. So this is the things I like to be more particular about. Like, does Bitcoin halving have an impact? It probably will, just because we're also in a different space than we were previously. It's a much bigger place as far as the markets are concerned, as far as the players who are concerned. So I think that the halving will have an effect. But you also have to consider that this is going to be really problematic for a lot of miners. If you're a miner right now and you're not sufficiently productive, very likely you're going to be taken out, because you're not going to be able to keep up with the difficulties of the Bitcoin mining in the first place. So I think that this is going to be the real challenge when we see what's going to happen with the halving, because a lot of those miners, they are some of the biggest sellers that we see into this market. Like on average, they're selling somewhere around like 75% of all the Bitcoin they mine on any monthly basis. So I think that that's something that I would keep track of. But overall, I think that I would still look ahead to say that the timing with all of these events, and I'm keeping the macro inside of that as well, in terms of expecting a much easier monetary policy probably into 2024. I think that will contribute to a better market environment, at least probably in the first half of the year, but probably in the latter part of that.
Yeah, I think the narrative, or the halving, is certainly a strong narrative that can pour fuel on the fire, but I don't think it's what sparks the fire initially. Because again, going back to the macro side, we've done a lot of work on this, and Raul and I have had tons of conversations on Real Vision's Pro Crypto Insider talks on this. When you actually overlay prior Bitcoin halvings, right? Again, similar to like we talked about with prior cycles, the consistency of the timing of this, right, is, I think, one reason why people latch onto the halving, saying that's the bullish event, right? But it happens to be more it coincides, when the halving happened, actually coincides with the perfect kind of powder keg for, again, a bottoming and then recovery in the business cycle, a global liquidity cycle recovery. And when you overlay year-over-year changes of major central bank balance sheets, for example, against the year-over-year change in Bitcoin, and then you put halvings, right? You identify where the halvings are, they line up perfectly, right? So it's not that the halving itself is what the driver is, but it happens to be, it pours fuel on that fire, because for whatever reason, for why people are buying, right? It could be people like myself who look at the macro and say, hey, I think getting into, second half of 2024 and really 2025, there's almost a perfect kind of storm or setup for Bitcoin to outperform. It doesn't matter if I'm buying for that reason and somebody else looks at it and goes, oh, the halving's in April 2024, and I'm going to buy in because historically the behavior that the halving can kind of incentivize, right? Because it's become a bit commonplace as a narrative. That's what I mean by saying it can pour fuel on that fire. But in and of itself is not the core driver of new cycles.
We talked a lot about macro. I want to zoom in on Bitcoin fundamentals. What's the most important Bitcoin fundamental metric? If you had to pick one, would it be supply on exchanges, daily active transactions? What is that to you?
I don't think you can pick one. And in fact, I never do. Like, oftentimes when I think about fundamentals, and this is across L1s, for example, and I pick L1s to kind of separate it from maybe other tokens, just because I think it's easier, because you have kind of apples to apples kind of comparisons across these things. But I think that if you take TVL, for example, like why does TVL not really work well as by itself as an activity indicator? And, there's not a lot of TVL on Bitcoin because you don't have smart contracts, for example, or at least not in the same way that you do with Ethereum. But, in my view, the problem is what TVL doesn't tell you, at least as a top line number, is the transparency of everything underneath it. Like, what are you holding in that TVL? Is it all stable coins? Is it all tokens that perhaps are much harder to price or easier to price but harder to value, so that I might get distortions between that value and the price? I don't know, so I think that's the first problem, which is why I kind of look to other things like, hey, what does the transaction count look like? What do the active addresses look like? A good place to kind of notice that is what's going on with the L2s and Ethereum L1 right now. You see that ZK Sync Era, for example, is getting a huge amount of transaction counts, increase in active addresses, but the TVL is actually still fairly low. It's a fraction of what you're getting on Arbitrum, on Optimism. And in part, that reflects that people are perhaps maybe chasing points that allows them to get an airdrop. So these things, I think, kind of create a lot of distortions. That means that you can't really look at any one thing in order to kind of rely on in order to actually measure the active kind of transactions that are actually happening in the space.
Yeah, I think if you take the approach of looking at these as networks, right, it kind of boils down to, and again, I'm trying to do my best to put my my RAL hat on too, because unfortunately he couldn't join us, so I'm trying to speak for him as well. Simply put, it boils down to how many people are using that network and how much transaction volume is actually being facilitated through that network, right? So you look at, David mentioned active addresses, definitely top of the list. Total transaction volume, right? So how much is actually being in dollars, how much is actually being that token being used to facilitate transactions. There's other ones you can use more kind of for shorter term, trying to identify shorter term inflection points, or if you're trying to more trade around these things, like what the percentage of UTXOs that are in profit, right? And you can identify kind of extremes in those types of indicators. But when you're talking about the long term, it's really just about adoption, right? And how much is being used and how much volume and value is actually being facilitated and driven to these networks.
Yeah, I think there's a reason why we use ratios and traditional finance, as well as here. I think it makes a lot of sense too, because it's not just, hey, what does my transaction count look like? Or separately, what does my active wallets kind of look like? It's, what do my transaction counts look like relative to those active wallets? And by the way, how do I make sure that it's not one person with 20 wallets? It's actually just one person who is making these transactions. So I think things like that matter in this space.
I have a channel on YouTube, me and my brother, there's a million retail investors that, joined up, whether it's last cycle or 2 cycles ago, AltCoinDaily on YouTube. And to me, and feel free to disagree with this, but to me, it seems like markets always need a narrative, or at least have a narrative, especially to the retail audience. Last year in crypto, speaking of crypto cycles, I feel it was NFTs and play to earn. If a narrative emerges this next cycle, what do you think it will be?
I think sector by sector. So, what I've found more recently, and I was in Singapore for Token 2049, I was in Paris for ECC, and there were very different discussions that were being had in different places. When I was at ECC, the focus was heavily on like infrastructure, right? Everything was about building out infrastructure, and that was the big topic du jour. But something that kind of came up more towards the end was this idea of like, well, why are we talking about apps? Because to some extent, we've now kind of built out enough infrastructure where we know this stuff works. Like 2 years ago, that was a huge factor, right? Everything that we were talking about was infrastructure, because we didn't have the means, if we were going to start bringing people en masse into to the crypto space, to actually handle that activity. Now, of course, activity levels have been depressed, but the big conversation that people are now having is, what are the apps that we need to kind of get in? And I think we're still testing that space. I don't think we've cracked that egg, or cracked that nut rather, or whatever this expression is. I don't think we cracked that nut just yet. Certainly, I think that we're seeing elements of it, like SocialFi in this form of like friend tech has been an emerging kind of space that I think people are looking at. Definitely when I was in Singapore, there was a lot more talk around gaming and how that was going to incorporate NFTs, which felt more like a narrative that had been kind of tapering off in the US, but it's very much alive, because I think that's where a lot of the developers are over there. So it's going to be elements of that I think are going to be meaningful to the space. So I'm looking at, SocialFi, I'm looking at gaming, I'm looking at decentralized identity and how that's going to change things. I think that with, tying it back to the macro with the higher real yields, for example, we've kind of started looking more heavily at tokenization of real world assets. And, understandably, a lot of crypto OGs in the space have been very skeptical about that because they're saying like, didn't we try this? We tried it in 2017. We get it. In down cycles, people like to have real world assets. But also the big difference was we were looking at a low yield environment at that period of time, where we're in a very high rate environment right now. And the conversation itself has switched. So this actually can become a lot stickier in terms of getting institutional activity in the space, as well as just, retail looking for different sources of yield to diversify their holdings.
Yeah, I think if we think back to prior cycles, hitting on something that David mentioned, but then just think about how crypto's kind of evolved, right? Obviously, Bitcoin being the OG, then Ethereum comes on the scene, and we had the whole ICO boom of 2017, which laid the groundwork for kind of token launches, right? Actually being able to permissionlessly launch, a tokenized asset. Then we had this lull, right, as hype died down, and then you had kind of DeFi summer, right? So now you're getting financial infrastructure built out to be able to trade these things, lend these things. You're starting to see more tokens come to market, right? Which, yes, was very speculative, inherently speculative, but that drove a lot of interest, drove a lot of capital, a lot of investment into this space. As that started to rise and take off, right? You saw bandwidth issues and congestion issues on Ethereum, which then led to your kind of alternative L1 narrative, right? That sparked because people needed to go elsewhere because it was just too expensive to transact on chain. So that drove another narrative. Then you had NFTs come along, right? And one point that I want to read out that David made that I completely agree with is I think we now have enough pieces of the puzzle, at least in place, for us to really do some very creative things, especially on the application side. And whether that manifests as consumer-facing applications, whether it's SocialFi, whether it's, gambling, right, which I think is another industry that'll take some time but is ripe for disruption, especially with this type of technology. I think the next narrative has to be focused on that kind of what can you do with this, right? We can't, this space will never thrive if all we're doing is trading DeFi tokens on other DeFi protocols, right? I think that application layer is going to get more and more attention and probably will be that driving factor to bring people in. And then you have other things that ancillary are kind of moving around that narrative as well with, brands and companies and organizations and creators coming in and trying to use NFTs not just to have, a Web3 presence or an NFT presence, but actually use them to enhance their existing business models, which I'm a very big believer that they can be used for that. So we've got to have these pieces. And so what I'm really excited about is to see what we do with it, right? What are the creative ideas and that kind of like Cambrian explosion of creativity that can come out of this? Because I do think we have enough in place at this point, and we needed all those things to be built out before we could get to this point, right? And it's taken a long time, but I think we're at that point where that application layer is going to get more and more important. And I think you're starting to see that even just in the narratives of, protocol communities, right? With folks like Solana and everyone trying to look at, deepen and trying to figure out ways in which like take that so what, right? Okay, we built all this great infrastructure and technology and DeFi applications. All right, now what is the so what, right? What can you actually do with these things? How can you use them in creative ways and create entirely new business models? And so I think something along that realm of more consumer facing applications is going to be the driver of next cycle, at least to bring more non-crypto users in.
And I think that's going to happen. It's kind of what happened with the Internet 2.0, or, if we compare Web 1, Web 2, and Web 3. I mean, Web 2 was really about, hey, let's just kind of have, or Web 1 rather, was like putting blogs on the Internet. What changed? Well, we had HTTPS and we had secure socket layers, but nowhere in the world does anyone go like, hey, remember what was awesome for the world? SSL. That was the great thing that we had. No, everyone just talks about like, well, we have Amazon and we started just buying things, but everyone just kind of forgets that intermediary step of like, no one back in like 1998 was wanted to like put their credit card on the internet. You thought it was just going to get stolen, until we had that security layer on there. Like then we were like, Amazon like became big. So I think we're going to need that step. And, we've built a lot of that out. It's already still happening. And also, by the way, none of this stuff exists in a vacuum. I think this is the other thing that people forget. Because like, look at all the other stuff. So outside of crypto, of course, the big tech theme that everyone's been reckoning with is AI. And generative AI is changing things. But also, in my view, it's actually entrenching the need for Web3. Because what is the whole value proposition of Web3? Well, Web3 is owning your own content, owning whatever you produce, owning your intellectual property. Like, what did the writers just protest about in Hollywood? Well, one of the big issues was, I don't want my intellectual property stolen by AI if I write it. I mean, like, that is a huge issue that Web3 is positioned to solve right now. So I think that these things are already kind of coalescing to form some kind of big theme that, I mean, I don't have the mind yet to kind of comprehend what it's going to be. But I do think that it's like a singularity event. Like, humans are just bad at kind of interpreting that kind of stuff, right? But I think it's going to materialize, and it's going to materialize sooner rather than later.
I was just going to joke that there's definitely way smarter people than me that will figure out like what that thing is, right? I'm not building it, but and probably it's above my pay grade. But what I will say, and I'm sure both of you probably could attest to this in your own experience as well, is what I've noticed ever since the first kind of day I stepped into this industry is I've met some of the smartest, most thoughtful people I've ever come across in any industry in my life that are dedicating day in, day out, and essentially their identities to pushing this space and this ethos forward. And it's a bet on that type of talent right now.
In our final 6 to 8 minutes, I just want to finish up with some big picture questions. And just if you're speaking to like an average person coming into the market today, the crypto market, what advice would you give them when there's all these things to look at and all these narratives going on? David, what advice would you give a new crypto investor?
So I would start small. I think that a lot of people kind of jump in, and the first thing they say is like, well, I don't understand how a blockchain works, or I don't understand how Bitcoin works. And, in my mind, I think that's fine in a lot of ways. Like, in many ways, we don't understand a lot of how our world works. Like, I don't understand how, the relationship between time and mass, but I live in this world, like, and you do too. Like, but, and for a very long time, we didn't think that there was a relationship. So I think that this happens all the time. But what's better is to kind of say, like, okay, what do you understand as far as your views on, and I tend to think of everything in a macro kind of framework about what's going on in the world. And what does Bitcoin represent to you in that world? And I think that's a lot more powerful because, talking about these kind of finite kind of concepts of like, oh, Bitcoin as inflation hedge, it doesn't work well because these regimes change. By the way, gold doesn't work well as an inflation hedge either, but we treat it as such. It historically, that relationship doesn't work. So I like to divorce that part of the conversation and just kind of bring it back to what do they like, what do they understand on that kind of finite basis? And by the way, like, it wasn't Bitcoin that actually brought me into the space in the first place. To be honest with you, it was Ethereum. Like, I understood like the value that having that platform like could what that represented in terms of changing how we actually use all the stuff that we have on the internet. And then backwards, I kind of came and kind of fit myself into Bitcoin, and I realized, oh man, I understand it. Like, I didn't get it at one point, and I read the white paper, but like it still didn't click with me. And all of a sudden, it happened. And I think that we all need to just get on the learning curve in order to kind of get to that point. It's, we all operate at our own kind of time.
Yeah. Speaking of that learning curve, I would also say start using this stuff. Start playing around with it. It's most of your learning that will come in this space, right? And really having those aha moments comes from actually using these applications, using the technology. Don't put anything you can't afford to lose. There is still a lot of risk in the space, of course, right? All those caveats exist, but you're going to get a lot more out of actually, spending 30 minutes to an hour playing around in DeFi land, right? With these applications and doing these types of things on chain than you will from reading the white papers. So I would say hands-on is the best learning experience you can get in this space. It's also how you start to figure out what jives with you, right? Or what you find most interesting. Some people are very DeFi centric. Some people are focused on, as I mentioned, like the gambling side of things, right? depending on what your expertise is too, what's amazing about this technology is eventually it has potential disruptive powers across so many different industries. See if there's an area, depending on where you come from, what your background is, what your experience is. I would venture to bet that there is some type of place for you in this ecosystem, and you figure out how to get there by just starting to do this stuff, starting to play around with it.
Gentlemen, final question as we wrap up this discussion on cycles, the crypto cycle, past, present, and future. Obligatory Bitcoin prediction question. Based on the cycle, what range could you see Bitcoin topping off at the peak of next cycle? Maybe David. I'm putting you on the spot.
So as an exchange, we actually don't give price forecasts, but I think right now we're operating a pretty finite kind of range. I would say we're probably at 25,000 on the bottom, maybe 28,000 on the top. And, I pick those numbers because 25,000 for me seems to be where people have been unwilling to sell, because if you are expecting a Bitcoin spot ETF to materialize sometime in the next few months, why would I be selling my Bitcoin? You don't have to expect that Bitcoin is going to 2x from here. You just have to expect that Bitcoin is going to go up. And, I'd say that's been the floor. And then the 28,000 has been kind of where, that 100 day, I think, did I say 28,000 or 28,000 before? I hope I said 28,000 or 25,000. The 28,000 basically is where that 100-day and 200-day moving averages converge. And so, I think that we've seen that that's presented a pretty strong kind of ceiling. I do think that we will break out of that probably in the next cycle, particularly if this Bitcoin spot ETF materializes.
All pros with a similar caveat, not investment advice. We don't give price targets either. But holding on to my head, I think we get back to, let's say, close to all-time highs. Right now, base case, assuming the cycle analysis and everything with the macro that we're looking at lines up and continues to progress the way it has. By the end of 2024, I think we'll be back towards those levels. When it comes to the breakout where you can go to a new all-time high in the next cycle, you see crazy predictions of anything from 500K to $1 million, right? I think if Bitcoin hits $1 million, there's a lot of real world problems and bad things that are happening to a lot of people, right? So it's a bit of a perverse kind of conversation when you think about it from that perspective. But I don't think it's crazy to think that Bitcoin could 2x from its previous all-time high into next cycle and get up to 125, maybe even 150, depending on, again, how big this next kind of global liquidity cycle looks like. But I still caution against the really kind of almost egregious price targets that get, much, much higher than that.
Absolutely. And that last question, just for fun, it's something we all talk about, half the fun of crypto. But gentlemen, this was such a great discussion. I want to talk about where the audience can find you, but I do want to encourage the audience. There's so many great speakers and panels at the Festival of Learning, so please check out other panels throughout the day. But David, where can the audience find you?
I'm not going to give out the URL because it's hard, so just go to Google, type in Coinbase Research, and our stuff is going to pop up.
Awesome. And Kevin?
Yeah, you can do the same for Delphi. Ours is probably a bit easier. DelphiDigital.io is our site. You can follow us on Twitter, Delphi_digital. And we try to post a bunch of threads and charts and all that good stuff, and try to make a decent amount of it free as well. So, that's where you can find us.
Awesome. And you can find me, AltCoinDaily, on YouTube and Twitter. Thank you, everybody. The Festival of Learning with Real Vision and Ledger. Check out some of the other events.
We hope you enjoyed the video. At Real Vision, we help you understand the complex world of finance, business, and the global economy with in-depth analysis from real experts. Join the revolution at realvision.com.